Doug McKenzie, and welcome to the Lendtech Show. On this episode, we explore how companies use data to source new customers and to determine they are who they say they are. Kicking off the episode, we take a look at the core challenges within the lending industry. Firstly, I sit down with MotoNovo, who tell us about these challenges and how they actually offer up new opportunities.
We're in a period now, I think, of unprecedented change. An unprecedented change, I think, is great from an innovation and disruption perspective, but, equally, we have to face up to the fact that it has, presented some challenges in certain areas. I think core to lending, of course, is the availability of capital, and I think there's been, changes within the market that in some areas has made it more difficult or more expensive to offer capital out to customers and to businesses. So that's a challenge that has needed to be responded to. And I think, bringing the lens a bit closer to point of sale motor finance and what's going on in our particular market, it is a highly competitive market, challenging margins, and I think an opportunity to really innovate on the solutions that are provided to end customers. And I think looking across that spectrum of what's going on the political side, thinking about what's going on with Brexit, and of course the automotive industry is potentially extremely impacted by some of the outcomes of Brexit. Looking at the economy, we've got unsecured lending at high rates at the moment, and areas where consumer confidence is maybe not what it was a couple of years ago. How do you respond to that and continue to provide customers with lending solutions that work for them, but whilst doing that in a way that's very responsible and ensures that we're not extending credit to people that can't afford it. So I think what underpins a lot of that is the technology part, and actually what we can provide through our digital assets here at MotoNovo and some of the developments we've made in the market, including Find and Fund mycar.com, but equally looking into the fintech providers that are out there in the market and the Lendtech providers that are out there in the market, that are just really great at focusing on the customer experience. So, lots of challenges, but I think through challenge comes great opportunity to disrupt the market, and I think ultimately the customer will always benefit from that scenario.
Do you know what? I don't know how bankers can sleep on a night, to be honest. And I don't mean that in the context of some of the regulatory issues that they've had, but they're facing so many challenges. They've got regulation on the one hand of either the new regulation that's coming in or the historic regulation that's catching up with them. They've got a huge changing customer demographic of individuals coming through who want to use cooler, more nimble banks and different financial services. And then, of course, you've got the rise of technology as well, and whether it's open banking and APIs or the other providers coming in offering different slithers of capability. I think if I was a banker, then there are lots of reasons for me to be losing sleep right now.
The banking industry looks strangely familiar if you look at it today and you compare it with what it was like about 20 years ago, in that a small number of banks continue to dominate the banking landscape. They continue to have the vast majority of the customers, irrespective of whether you're talking business customers or personal customers. They have most of the products, they have most of the balances, they have most of the savings, and they continue to rule the roost. So at the same time, the willingness of people to switch accounts is still very low, and that's in spite of a number of efforts on the part of the industry to encourage switching, like CAS, to make it sort of a little bit more, if you like, trustworthy and easy, a little bit more dependable. And so really, it's still a very much dominated industry. It's still pretty low on innovation. There's been a period of pretty, if you like, stable but low growth. Economically, the landscape looks a little bit dormant, for want of a better word. And of course, with Brexit sort of coming over the horizon, there's a few question marks about the sort of general health of the economy lying ahead. So not a very positive picture, but in that there's a whole bunch of opportunities.
Next up, we're talking data and what it means for customers. We find out how it enhances the customization offered to the customer and how it's actually used to determine whether or not someone should even be granted credit. We also talk with Atom Bank about their criteria for mortgages.
How do you use data to source potential new customers?
Some of them ultimately come down to almost like a big brother context of using data more effectively. So if you imagine in your own lifestyle, you're relatively young, you leave university, you get a job, you're probably going to need a car at that point to get to the workplace. At some point you're going to get in a relationship, you're going to have a long-term relationship, a marriage, whatever. If you imagine that the vehicle that you're using, the car you're using for that, is going to change over a period of time. And then if you get build up a family, then you need a larger car, and then ultimately when the family's flown the nest, you don't need such a large car, and you can get down to a smaller one. So you can pick up those kind of obvious lifestyle changes that an individual has got. If you can layer over and sell where cars fit in that, then naturally you can sell where finance fits for the car. Years ago, I moved house, and when we were looking around the house the first time round, I said to my wife, look, the kitchen's there, that's what we're going to go with. It's all cool, isn't it? Well, it's not brilliant, but we'll live with it for a few years because we're all in on the mortgage on this. The day that we moved in, my wife stood in the kitchen, and I went over and I said, yeah, it's just not good, this, is it? It's not really going to work for us. We're going to have to sort something out. We're going to have to put a new kitchen in. And she said, well, that's good, but where are you going to get the money from for that? Because we put it all into the mortgage. And ironically, there's a lifestyle change there. So any lender that I'd notified that I was moving, they could have seen that I was moving from one postcode area to another postcode area. I've had good credit over the past, 10, 15 years. They could see I've kind of traded up in house area, etc. But nobody wrote to me and said, do you know what, you might want like 10 or 15 grand for stuff, curtains, furnishings, maybe even a new kitchen. And if they had done at that point, I wouldn't really have cared about the rate. I wouldn't have been rate sensitive. So if it's another couple of percentage points over what I think I could get elsewhere, I'd have been brilliant. Where do I sign up? Because I need to get a kitchen. And I think there's an area where there's an opportunity for lenders to pick up more of lifestyle changes with individuals, irrespective of the demographic that they're in, and look at providing different products to them.
With the large amounts of data now collected on customers, what does that mean for the level of personalisation you can afford to give your customers when offering your services?
Yeah, I think the providers that will win clearly moving forward are the ones that best use the data that's now available. And I think within lending in particular, having access to that data is more important than many other sectors and markets that are out there, and being able to personalise, I think the offering of credit at the front end means that you can often offer credit to many more people that you wouldn't ordinarily or traditionally been able to do. And then I think you can also use data then as they go through the application journey to make it a much more swifter and seamless journey for them in order to bring them on as a customer. Then clearly once you've got them on book, you're then able to make it a much more relevant and richer experience, looking at opportunities to appropriately offer them further lending, looking at some of their behaviours and some of their spending patterns to tailor the services that you ultimately offer them. So I think there is a huge amount of opportunity. And as I say, I think the people that will really benefit the most are the ones that do the data piece and the analytics, to a higher standard.
How can you use data to work out whether somebody should be granted a line of credit, both using information that's present now but also predictive analytics?
Yes, that's really interesting actually, because I think we're actually going full circle on that. So you roll the clock back 20, 30 years ago, if you wanted a loan, you went into the bank branch and you probably sat in front of the bank manager and he would assess you, see, have you got a tie on, and what kind of job do you do and who do you know and things of that nature. And he would look at your performance or the performance of your bank account and then make a decision based on that. But clearly that's just not scalable. So then we found that the credit reference agencies came to the fore, and they're using all of the historic data that a consumer has built up with loans they've taken out and how they've managed those. However, the issue with that is that becomes a pure, computer says yes, computer says no, and it's based on historic data, and that's the failing of it. So it's a bit like personal finance. Historic performance is not a guarantee of future performance. So just because I've paid all of my loans in the past, why would I pay all of my loans in the future? If I haven't had a catastrophic lifestyle event, so lose my job, marriage separation, something of that nature, then what's to say that my outlook on repaying my loans isn't going to change over a period of time? So now if you fast forward to 2018, there's a wealth of data out there that will allow you to make a better, more informed credit decision. So you look at how people interact on the website. If they move the slider all the way over to the right-hand side, so I want the most amount of money for the longest period of time, they're kind of a bit desperate with it. If they move it around a little bit, if they're more considered, if they read through the terms and conditions more diligently, you can use a lot of that behavioural data off the site to start to build up a little bit more of a profile about, is this person making an informed decision on their credit? You can then look at other components. So, you know, there's a big debate about the extent to which social media data is allowed in credit decisions. I think it's an inevitability, ultimately. We all leave this tremendous exhaust of data out there, whether you're on Facebook or Twitter or LinkedIn, that lenders can use just to validate a little bit of information. So does Richard really work for that organisation? And has he really been there as long as he says he has on the form? And those are places, I think, where that data will come to the fore, and that allows you to get a much better data set.
Do you think that information gives you an accurate picture in terms of trustworthiness?
Ultimately, you want to know whether you trust that individual. So, you know, right now, if you said that you left your wallet at home, you needed 50 quid to get home to get a train ticket, would I lend you 50 quid? Yeah, absolutely I would, because I've met you, we've built a bit of a relationship, that's fine. The person out there, probably not, don't know them from Adam. So the more data you've got that can build this internal trust score, so do I trust Ali? That's the question you want to ask. Do I trust him? Is he going to do the right thing, irrespective of the rest of the circumstances? And that's where the data can provide that insight. If you can build that up, then yeah, Ali's the guy for me, and I will lend him that money because I know he's going to pay it back.
And similarly, I suppose on the digital side of that, if the person outside went to you and said, can I borrow £50? And you say no, you say, oh, hang on a second, you're Richard Carter. Oh, we know each other on LinkedIn.
Yep.
And you then start to have more information. Is it really the data that builds the trust?
Yeah, it is, absolutely. So if you take the analogy of the insurance sector as an example, so there is no way on earth I would ever have any telematics fitted to my car. I don't want anybody knowing where I drive, you know, how quickly I go around corners, or, you know, what time I go out on a night in the car. But I can get car insurance relatively easily because I'm of a certain age and I've not had that many bumps. When my children come for car insurance and you find that the insurance is more expensive than the car, that's the point at which you say, look, you're going to have to give up some of your personal data here. You're going to have to put this telematics in because it's going to save you £500. That means that you can have mobility. So, you know, just suck it up and deal with it. The same thing applies in finance, in my view. So if you have no credit profile and you've got no access to funding, then people are more inclined to share information to get to it. So you think about other markets like home collected credit. You know, do you really want someone coming around and knocking on your door once a week to give you money and take money back? Well, not really. You don't want everyone down the street knowing that you're borrowing money, but they're all doing it in those particular regions or those particular streets. It is what you have to do in order to get the money. So over a period of time, I think you can build up your credit profile by sharing a lot of information up front. You start to establish a footprint, and then from that, you can slowly move away from it.
One of the sort of keystone products that you guys offer is, of course, mortgages, and that's something that traditionally involves a lot of irrelevant data, a lot of strange credit scoring, and a lot of people who should qualify for a mortgage just don't, not because they can't afford it, but because of the way that it's approached. What's your approach to mortgages when it comes to figuring out who can and who can't, or who you would offer a mortgage to?
Well, first and foremost, the sort of main route to mortgages through Atom or via Atom is via our brand Digital Mortgages, which is broker-based, right? And that's because most mortgages in the UK are advice sale mortgages. And we made a determination that we weren't going to employ people as advisors, that we wanted our business to be automated. But we recognize that's actually how mortgages get distributed. So we partner with a number of brokers and they provide customers with advice. And that advice focuses on a few key ideas or key areas, one of which is affordability. At the end of the day, you know, banking is about taking risks. It's naive to think that everyone's going to repay their loans. But our going in position is we want them to. We don't want to lend money to people who can't afford to repay it. It's not in their interest, it's not in our interest. And I think any banker is going to tell you that. And if they don't, then watch out, right? So affordability is one of the key tests that you're trying to assess at the beginning of an application. The other thing is stressed affordability, which is what happens if interest rates go up and they go up substantially. Can you still afford to make the repayments given that you've got other household commitments? And that's incredibly important in what has been a very low interest rate environment. I mean, interest rates have been trundling along at 50 bips, down to 25 bips and back up to 50 for a decade. So it's easy to believe that it's just going to be like this forever. And I mean, you can't run a bank on the presumption that that's going to be the case. We're like any bank. We have a risk appetite. Risks we'll take, risks we don't take. We started off by offering remortgages only. We're now about to offer first-time buyer and higher loan-to-value ratio mortgages, so we'll go up to 95% in lending. But gone are the days where we're going to consider anything extravagant in terms of risk appetite. We've just got no particular agenda to go into what might be described as the sort of subprime or near prime market. It just doesn't fit the way our model works. And in part, that's also about how an efficient operational model operates. That if you do configure your business to try and serve what I might describe as smaller niches or edge case sort of, if you like, requirements, then you're going to have a lot more manual oversight and a lot more manual processes. That just doesn't work with us. So it really has to fit into a pretty tight definition of what fits Atom, not just what fits the market. There's lots of lenders out there. We don't make any promise to be in the business of serving all customers, but we are trying to be quite specific that if you do choose us, then we'll try and make sure that your mortgage is processed as efficiently and effectively as we can. In respect to what our underwriting criteria are, you'll not be massively surprised that I'm not going to give you a list of that. Well, I can't, to be fair, right? But I can tell you that the going in position is it's a no-loss business as far as we're concerned. We've got no appetite whatsoever to incur credit losses on mortgage lending, which makes us a bit unusual.
Finally, we discuss with MotoNovo where they see the future of Lendtech heading in this protean period. Equiniti give us the lowdown on their services and tell us how they're enabling banks to improve their services.
I definitely don't have a crystal ball, but what I do see in Lendtech is some great emerging solutions that are coming out. I think they will really help challenge and help take the market in different directions. MotoNovo itself is very much a challenger to some of the big established banks. So, I personally love what I see coming out of some of the Lendtech operators out there in the market. So, I think with us going through this period now of, this consumer revolution happening, technology really, being the underpinning enabler for that, I can see us really going off in some really interesting directions. I do think it's going to be really important, though, that there is, an element of collaboration between Lendtech providers and other financial services providers. Both have their own individual assets and capabilities, and ultimately, if we're going to give consumers, great propositions and the best outcomes, I think we're going to have to bring the two together. So, actually, personally, in my role and my position here at MotoNovo, I'm looking forward to pursuing opportunities that may well enable us in the future to collaborate with Lendtech providers to really give some groundbreaking solutions to customers.
So we provide the underlying technology and the capability that allows the bank or the lender to go and build their brand around the platform that we provide. So what we see there is that we have all of the underlying infrastructure, and it's extensible to the extent that we connect with all the necessary data sources right now, but of course we've got the capability to build in new data sources as they become available. So what we're able to do is bring all of that together in a kind of behind the scenes proposition, and then we deliver it to the banks or the lenders so they can go and launch their own differentiated propositions, maybe targeting very specific market sectors. So individuals just leaving university will have a particular tone of voice and a way in which they wish to interact, and maybe a different way of using an app. You'd have other people, maybe of my age, that want another particular way of working. They've got different generations and segments. So we provide all of that from a single platform. So it's not siloed, which is where a lot of the banks have been before of, all right, let's launch this and let's go and create a new platform over here. You need to have that same platform because you've got all of the regulatory aspects sitting underneath it. You've got all of the reporting, capital adequacy, all of that stuff that hangs off it. You just need to do it once. You can't keep doing it many times over.
Thanks for watching, and be sure to join us on the next episode of the Lendtech Show.